Coming up on Market to Market, NAFTA neighbors get a look at Trump's trade negotiation playbook. The Army Corps goes back to the drawing board over a controversial permit. And tapping a past investment helps lay some groundwork for future generations. Those stories and market analysis with Elaine Kub next.
Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com. And by Sukup Manufacturing Company, offering a full line of grain drying and storage equipment and steel buildings. Sukup Manufacturing is on a mission to protect and preserve your crop and the tools that produce it. This is the Friday, July 21 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Mike Pearson. Just like landing on the moon 48 years ago this week, the idea of having a new home went from dream to reality for many last month. New home construction surged 8.3% in June. Anticipated declines in farm income and the potential for increased loan defaults pressured the rural Main Street Index below growth neutral to 40.7. And the Dow Jones and S&P averages rode positive dividend reports to record levels on Thursday, only to fall back slightly in the final session. Trade has always been the big economic driver for rural America. Much has been done since World War II to break down barriers. In recent months, some work laid down by previous occupants of the White House has been dropped or come under increased scrutiny. This week, the Trump administration revealed what it wants to change in the 23-year-old North American Free Trade Agreement. Peter Tubbs has the details.
President Trump filled the White House lawn with props in a bid to promote both the purchase of American products and to push for progress in the renegotiation of NAFTA.
We want to build, create, and grow more products in our country using American labor, American goods, and American grit. When we purchase products made in the USA, the profits stay here, the revenue stays here, and the jobs, maybe most importantly of all, they stay right here in the USA.
The United States trade deficit with Mexico has been a frequent target of the president's criticism. Mexico is America's #3 overall trading partner. Agricultural trade with Mexico makes up 8% of the total, and the products sent across the border are a reflection of the differences in labor costs in each country. The main exports to Mexico are commodity products: corn, soybeans, hogs, dairy, and beef. Labor costs represent a relatively small percentage of the total price for U.S. exports. Imports from Mexico, however, are mostly products with high labor requirements, fresh or processed fruits and vegetables. With the exception of the early 1990s, the United States has run a trade deficit with its southern neighbor for the last 3 decades. The trade deficit grew tenfold after NAFTA was signed in 1993. The trade deficit shrank during the recession of 2008 and 2009 and has been relatively flat at 10 to 12% of total Mexican trade over the last 5 years. A prime target of the Trump administration's NAFTA negotiation team is Section 19. The goal of the negotiations would be removal of what are known as dispute review panels, which oversee import tariffs. Eliminating Chapter 19 is believed to be a red line issue with Canada, which has used the treaty language to appeal import taxes placed on softwood lumber imports to the United States. Canada is America's #2 trading partner, and the U.S. currently has a small agricultural trade surplus with the northern neighbor. Some analysts have charged most of the changes the Trump administration is seeking were already negotiated into the now defunct Trans-Pacific Partnership. The landmark treaty included Mexico and Canada among its membership. President Trump signed an order beginning the process of withdrawal from the trade pact during his first week in office. Reaction to the call for renegotiation of NAFTA was swift and divided. The National Farmers Union wrote, "For too long, Our nation's trade negotiators have prioritized a free trade over fair trade agenda, leading to a massive trade deficit, lost jobs, and lowered wages in rural communities across America. The National Cattlemen's Beef Association continued its support of NAFTA. It is difficult to improve upon duty-free, unlimited access to Canada and Mexico, and we are pleased the USTR's objectives for NAFTA include maintaining existing reciprocal duty-free market access for agricultural goods. The first round of renegotiations for NAFTA are expected to begin on August 16. For Market to Market, I'm Peter Tubbs.
U.S. drivers managed to burn through 143 billion gallons of gasoline over the past year. Much of that was cracked from domestic crude traveling through a vast network of underground pipes. Some of those subterranean pathways have been the target of contentious permit battles. This week, one federal agency was sent back to the field for another look at one of those permits. John Torpy reports.
The court battle over the Dakota Access Pipeline is expected to last through the end of the year, as the Army Corps of Engineers has been ordered to take another look at the application for the project. A U.S. District Court tasked the Army Corps to conduct a more thorough assessment of the possible environmental impact of the pipeline that crosses underneath Lake Oahe on the Missouri River. The nearby Standing Rock Reservation has been host to months of protests by tribal members and an even larger contingent of others who oppose the $3.8 billion project. Lawyers representing the tribe have asked that the pipeline be shut off while the Army Corps takes another look at the job site. The new evaluation is expected to be completed in December. Energy Transfer Partners, the pipeline's owners, have argued for oil to keep flowing during the review. Officials with the Texas-based company says they will lose $90 million for every month the pipeline is out of commission. The Army Corps of Engineers also argued for the spigot to stay open on the 1,100-mile pipeline while the officials double-check earlier work. Since June 1, more than 18 million barrels have moved through the steel pipe that stretches from North Dakota to southern Illinois.
This is about 1,134 miles of pipeline system.
Army Corps officials predict this appraisal will match their previous analysis. In Washington this week, two pieces of legislation were introduced to streamline parts of the permitting process for future oil and gas pipeline projects. One measure sets specific timelines for federal agencies to review oil and gas permit applications. The other removes the need for presidential approval when the pipeline or electric transmission line crosses a U.S. border. During the Obama administration, this rule was part of the fight involving the now scrapped international portion of the Keystone XL pipeline. If the bill becomes law, the approval process will fall to the Federal Energy Regulatory Commission. For Market to Market, I'm John Torpy.
Viewers of last week's Market Plus heard Tom Fitzenmeyer give the grim news that it would be hardly feasible for young farmers to get a place of their own. Historically, getting started has depended on having family already working the home place. However, this is not to say there isn't another way to get a start towards having your own piece of terra firma. John Torpy has our cover story.
Launching a career in commercial agriculture can be a struggle for many. The deck is stacked against these future stewards of the land as they face high entry costs and limited lending opportunities in an ever-changing economic environment.
Your startup costs being so high, it's a big discouragement for your young farmers. So if they can get a leg up somehow or a benefit from, established farmers or farmers who have started a trust, that's a huge benefit for the farm community as a whole.
However, one Iowa farmer's love of the land inspired him to help future generations of those just starting out. Almost 40 years ago, Harold Darner came up with a plan to help new farmers survive and thrive. With no family to take over his operation, Darner decided to place his land and house in a trust and gift it to those with a specific interest in tilling the soil. In 1998, nearly 30 years after the will was written, the Darner Trust was set in motion. The trust, one of only few known to exist across the country, contained extraordinarily specific conditions for prospective residents.
The bank was selected to be the trustee, and we are to administer the trust for 100 years, leasing the farm to tenants for 5-year periods of time, and those tenants are to be young married couples with a true desire to make farming their life's work.
The place where that life work starts is a 160-acre farm just south of Fremont, Iowa. The tenants live in the former Darner home for free. They pay rent on the farm ground, but at significantly reduced rates, allowing the young couples to save money for the future. After 5 years, the lease is up for renewal. The trustees move on to their own farm, and the application process starts all over again. This cycle will repeat 15 more times until 2098, when the farm will be donated to the University of Iowa.
We actually put an ad in the local newspapers advising the public that we are in the process of taking applications for this opportunity. We then will screen all of those written applications through a local trust committee of 4 people, and then we make a very difficult decision at the end of that process of who to select for the next 5-year period. And I can assure you it's a very painstaking process that we all take very seriously, because we actually hold in our hands the ability to help out one family that's being represented by all these different applications.
One of those couples helped by the Darner Trust were Seth and Jenny Van Zanti. Along with their 4 children, the couple lived on the farm from 2008 to 2013.
What we're doing here is not really about us. It's about who's next here. And even though we're right in the midst of trying to become established, we've got to think forward to what whether it's our kids or that generation in particular, what are things we can be doing today to give them the skills for tomorrow.
The low cash rent and high grain prices of the time helped the Van Zantis get a sizable head start on the operation they always dreamed of owning.
Other people just getting the word out that you can do this with your farm operation. If there's older farmers out there and they're not sure what they want to do, they should, check into maybe setting something up like this for their farm to benefit younger farmers.
The Van Zantis were able to expand their operation by several hundred acres because of the savings opportunity made possible by their stretch on the Darner place. Brett and Morgan Mallory, the current tenants of the Darner farm, have off-farm jobs to help make ends meet. They are grateful for what the trust has provided them in their quest to purchase their own place.
I farm with my stepdad part-time. Getting started farming is kind of hard, so we do a little bit of construction on the side, and this came along and we decided to hop on it. Honestly, we probably wouldn't be started farming yet. I don't know. There's not really too many people that want to start somebody out anymore, and cash rent's king at the current times, and just kind of nice to know that someone had the vision to start us out.
The Malorys are in their 4th year on the farm and are currently searching for land to acquire. Darner's one idea more than 3 decades ago will touch 20 couples over the trust's lifespan. For those who qualify for the opportunity, it means a greater chance to have a life working the land and the potential to pass something on to their own families.
Without the Darner Trust, we probably wouldn't be able to provide opportunities for the kids. If that so choose, if that's what they want to do in life is agriculture, whether it's in the operations side, whether it's in the retail side, whether it's even in ag whatsoever, it's allowed us to give them the life experiences that you see in the farming sector, and hopefully we can extend that to them.
For Market to Market, I'm John Torpy.
Next, the Market to Market report.
The commodity markets chewed on the fodder provided by a few brief breaks in the oppressive heat wave gripping the nation. For the week, the nearby wheat contract dropped 12 cents, and after a volatile week, the nearby corn contract gained 4 cents. Weather pushed the September soybean contract 22 cents higher, And December meal garnered most of the action, moving $5.60 per ton higher. In the softs, December cotton rose $1.84 per hundredweight. Over in the dairy parlor, August Class 3 milk futures declined 54 cents. On Tuesday, USDA announced a single animal with atypical BSE was discovered in Alabama. The market largely ignored the news and moved higher the following day. For the week, August cattle lost $1.37 and nearby feeders fell $1.33. The August lean hog contract added $1.20. In the currency markets, the U.S. dollar index plunged 125 points. Crude oil weakened 98 cents per barrel. COMEX gold poured on $27.40 per ounce. And the Goldman Sachs Commodity Index lost nearly 3 basis points to finish the week at 370.90. Here now to lend us her insight on these and other trends is one of our regular market analysts, Elaine Kub. Elaine, welcome back.
Always a pleasure.
Thank you. In case you want to go over things again, you can listen to our Market Analysis and Market Plus podcasts anytime online at iptv.org/MTOM. Now, Elaine, we've got to start this off. It is blisteringly hot across so much of the Corn Belt. We've brought you down from the Dakotas, where the drought is still gripping both North, South Dakota, Montana. Tell us, what are you seeing? How does that spring wheat crop look up there? Is there any spring wheat crop to speak of?
Well, it looks dead where I see it. But so this is going to be kind of a theme in a lot of markets this week, that I'm tempted to tell you it's dead, it's over, but I am worried that I am reflecting my own backyarditis, right? So it's dead where I am, but in Minnesota, 25% of those fields are rated excellent. So there is a spring wheat crop, and somebody's going to make a lot of money off of some spring wheat fields, but the vast majority of spring wheat producers are not. And the beauty of it is that next week that North Dakota spring wheat tour will go on, so you don't have to take my word for it. There will be objective data, and some of that will go into Minnesota, so you'll see that whole thing. But I suspect they're going to tell you that Elaine's not making this up. It really is that bad, and so that big freak out that the Minneapolis futures had a couple weeks ago, I think it could retest that.
Okay. All right, now, if we do go to retest that on the Minneapolis contract, are we going to see a similar, of course, not to the extent, but will we see those funds come back in and buy Chicago and Kansas City?
They shouldn't. I mean, the shortage of spring wheat, of high protein spring wheat, affects that one specialty market, that and Durham, and these other specialty crops. I've looked at, canola prices, sunflower prices, a lot of those North Dakota specific or North Dakota primary crops compared to last year's prices are on average 7 to 20% higher than they were last year at this time. So it is mostly focused on those crops in those regions, and the other wheat markets are quite normal. And we are seeing that in the Kansas City wheat, the harvest pace is quite normal. The spread is as wide as it has ever been. They're not freaking out.
Okay. For those folks with harvest coming off, then, is your advice just get it unloaded? I mean, we're sitting on a massive glut, both domestically and globally. How do you handle these average yields from what I'm hearing? Mm-hmm. Is it worth holding any back to try and capture any future rally?
It is worth holding to capture carry. There are very wide carry spreads, and if you're in a position to hedge that grain, put it in a bin, and capture 50 cents of carry for the next 6 months or whatever it happens to be, it's 27 cents through December. You can do that. Also, I would recommend making sure you know your protein, because there will be, and there already are, wide protein spreads on the cash market. So maybe go get that tested.
Okay. Well, now let's talk about the corn market. We've got a question here from one of our Facebook followers, and this is from Michelle in Iowa. And it's a question I've heard from several folks. We know that we have a lot of old crop corn. And Michelle wants to know, why is old crop going up when there is no shortage?
Well, it's following along with the new crop, and the end users are in a position where they're not resisting these prices. The crude oil market, the gasoline market, the ethanol market, those are all positive things. The dollar is going down. There's little bits of room like that for some upward movement to be going in the entire commodity sector and grain specifically. And I don't think that we've rallied so much that Michelle's question, is a big factor at this point. So just little things, I think, at this point.
Now, as you look out at new crop corn, so many places I've heard from growers, we're sitting on the bubble when it looks.
Yes.
We look at weather, we look at 100-degree temperatures during pollination. There's concerns about what might actually be growing in the field. How do you propose they handle marketing as we get close to that $4 mark?
Yeah, you're absolutely right. I agree that this is kind of the decision moment. It's a little bit later this year than other years because the planting was late, the whole progress was late. So we are having this suspense farther into our summer. We have to see how pollination goes. The NOAA put out their 3-month outlook, and it looks hot and dry for the majority of the Corn Belt. So I'm inclined to be bullish. I'm inclined to think that we will go back and retest July highs. I hope that will happen, especially if we see the weather continue to be concerning like it is, yes.
Okay, watch out for that 417 that we touched earlier on the December contract.
And I'll say this too about South Dakota, North Dakota corn. It is a small part of the U.S. corn crop, but it is not insignificant. And I have seen evidence, folks have already started canceling that out, putting it up for silage. So some of that is toast too.
Yeah. And I've seen some people say it's not even worth silage anymore. The drought's been that terrible.
It's not fun.
Ugh. So now the soybean market, of course, we're still a long way from August and or 10 days, 15 days away from August, but we've seen this soybean market put 80, 90 cents on here just in the past 3 weeks. What does that mean when we get to August if this heat continues?
If the heat continues, there's real potential for soybeans. You look at it compared to last year, any other year, you would want to say that it could go up. But when you look at the old crop market, let's say, or even that October, November timeframe when we want to be selling exports, I'm really concerned about the soybean prices when you look at the large and sort of overwhelmingly large supplies that could be competing with us out of South America, where price-wise, we'd have to knock about 8 cents off of our basis, 8 cents per bushel to make us competitive in that October, November timeframe.
Ooh, so should we be locking in some sales today?
If you don't have any locked in and you're confident that you're going to have some bushels to sell, I mean, as opposed to having nothing, yes. If you already have something on the books, I mean, wait and see.
Okay, and if we don't, obviously we'll wait and see what happens in August, but would this be a year that you would consider owning beans out past harvest, not unloading them right away, getting through that potential South American shipping period and then seeing what happens?
I mean, this is really a personal logistics decision. You know, a lot of folks won't handle beans just for their own reasons, but market-wise, yeah, that's something could be done. Again, you've got opportunities to perhaps get some carry in there. There's certainly opportunities out there.
All right, well, now let's take a look at the livestock markets. We saw, as we mentioned earlier, an atypical case of BSE was reported in Alabama, spontaneous. The market seemed to shrug it off.
Yep.
We know that's not contagious, doesn't go to humans. As you look out a little further, this hot weather cannot be helping grilling season. What's your take on beef demand, Elaine?
Actually, all of the signs have been good, right? I mean, week over week, the export numbers, I mean, you asked about grilling season domestically. You're right. We're going to start getting weaker. And we do kind of see the signs of that in the cutout, cut by cut. But I think overall, the impetus or the momentum in the beef market is all roses. It's all coming up roses. We've got a huge week over week increase in the weekly sales numbers, 20%, I think, and that's true of both beef and pork. The dollar keeps coming down. I mean, I'm happy about the beef sales situation.
How happy? I mean, given that we're going to be renegotiating NAFTA, of course, we rely on a lot of cattle trade between Canada and the U.S. and Mexico and the U.S. How should you handle those deferred months, Elaine?
Well, I guess let me temper my happiness. I don't want that to be interpreted as go buy cattle futures on Monday.
Okay.
Because I don't want to overlook the fact that we had a hugely bearish cattle on feed report today. So when I say happy, I mean I'm not concerned about the whole market falling apart in the next 3 months, let's say. So I'm fairly neutral. I think we found a good price level, and once we get past whatever horrible things are going to happen on Monday. And
let's talk about that. What was the big bearish surprise in your mind?
So placements was 116% of last year's number. And the expectation was more like 106%. So I had to look and make sure that I hadn't read it wrong. I mean, that was a hugely unexpected amount of placements. But this, like I said, is the theme. If you had asked me and not the entire panel of analysts, I would have said, of course, we're going to have huge placements. There's a drought in a very significant chunk of cattle country out in the western states. And state by state, that is borne out. Placements in South Dakota were up 167%.
Wow.
And Nebraska, Kansas, Colorado, all of the western states had these large placement numbers. So I think it is a drought story. And again, I'm not making this drought up. It's real, and we're seeing evidence of it finally in those cattle numbers.
Well, now let's talk about feeder cattle, because if we're moving all of these feeders into the lots today rather than in the fall or early part of 2018, does that make you pretty hopeful when we get out that far? Or our cattle feeders going to be coming off the sale of a lot of beef and depressed live cattle prices, and they won't be as inclined to bid.
Well, it's hard. I mean, there's profit throughout the whole industry at this point, so there's probably room for it to wiggle either way. I guess I'm not super bullish on those October feeders yet, but certainly if we get closer to that and we haven't seen anything come onto the cash market, it certainly bears watching.
If demand is still strong.
Yeah, in the near term, this is going to be bearish.
Okay.
Absolutely.
All right, limit down on Monday?
I suspect, right?
Okay.
I mean,
yeah, that's a big number. Before we let you go, Elaine, we got to ask you about lean hogs. Exports were up. Pork demand continues to seem to be strong. Cutout values are high.
Record high pork belly prices. So that's fantastic. You're not going to really see it at the grocery store for the next 6 to 8 weeks. So there's a trade opportunity for you. Go stock up on bacon, about $5 a pound.
Stick it in your freezer. You bet.
Yeah, but so that's something that will probably get resistance again next month, a couple of months from now. But for now, positive news, absolutely.
Positive news. And the U.S. dollar, Elaine Kub, we're going to continue to see that break down a little bit?
I think so. It's on a trend. I mean, the euro's on an uptrend and we're on a downtrend, and that's positive. It's good for agricultural exports.
All right. Well, Elaine Kub, thank you so much for taking the time to talk to us this week.
Thank you, Mike.
That wraps up the broadcast portion of Market to Market. However, Elaine and I will keep the conversation going, including answering more of your questions during Market Plus, which is available in podcast and video form on our website. While you're there, follow the links to our Twitter feed. Tweet us your questions via @MarketToMarket, and we'll get you the answers during our market analysis or Plus segments. Join us again next week when we look at how Kansas ranchers are rebuilding the dream after catastrophic fires. So until then, thanks for watching. I'm Mike Pearson. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content. Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com. And by Sukup Manufacturing Company. Offering a full line of grain drying and storage equipment and steel buildings, Sukup Manufacturing is on a mission to protect and preserve your crop and the tools that produce it.